What if I told you that XRP hitting $10 is not the real story? What if the real shock comes when it moves toward 50 or even $100? And what if the timeline for that move is already quietly forming behind the scenes through banks, ETFs, and one final decision from regulators? Most people are watching the price chart. Smart money is watching the structure being built underneath. Today, we're breaking down the realistic timeline for XRP between $10 and $100. What needs to happen? What's already happening? And what could be the final trigger that changes everything? Before we go deep, make sure you hit like and subscribe to CoinGraph Community, because we don't just talk hype here. We connect the dots. If you care about crypto strategy, market psychology, and long-term wealth building, you're in the right place. Let's start with reality. XRP moving to $10 is not just about excitement. It's about market cap, liquidity, adoption, and legal clarity. For XRP to hit $10, it would need a massive increase in capital flowing into the ecosystem. That doesn't happen from retail investors alone. That kind of move requires institutions. It requires banks. It requires regulatory confidence. Now think about this. XRP was designed for cross-border payments, fast settlement, low fees, high scalability. The company behind its development, Ripple, has spent years building partnerships with financial institutions around the world. Not crypto startups, real banks, real payment providers. And that matters because infrastructure moves slower than hype. But when it moves big. The legal battle with the U.S. Securities and Exchange Commission changed everything. For years, uncertainty kept large American institutions on the sidelines. Funds could not comfortably allocate serious capital while legal status was unclear. But as regulatory clarity improves, risk decreases, and when risk decreases, capital flows in. Here's where the timeline becomes interesting. Phase 1 is legal clarity and institutional comfort. Phase 2 is financial products. We've already seen Bitcoin and Ethereum ETFs bring in billions of dollars. Now imagine an XRP ETF. The moment an XRP ETF becomes reality, it opens the door for retirement funds, pension funds, and traditional investors who don't use crypto exchanges. That's not small money, that's structural money. A $10 XRP could realistically happen in a strong bull cycle if three things align: full regulatory clarity in the United States, major exchange relistings with deep liquidity, and at least one approved ETF product. In that environment, speculation plus institutional inflows could push XRP into double digits. That could happen in the next major bull run, especially if overall crypto market sentiment turns aggressive again. But what about $50? That's where things separate dreamers from analysts. A $50 XRP implies global scale adoption. It implies that XRP is not just traded but actively used in cross-border liquidity corridors. It implies that banks are not testing the technology, but depending on it. For that to happen, XRP must become deeply integrated into the global financial plumbing. We would need to see measurable transaction volume flowing through XRP-based systems daily, not marketing announcements, real settlement data. If large remittance corridors between countries start routing billions through XRP liquidity pools, demand pressure increases naturally, not from hype, from usage. Now let's talk about $100. This is the number that gets people emotional. But let's stay logical. For XRP to reach $100, the global financial system would need to trust it at scale. That means central banks interacting with blockchain rails. That means tokenized assets settling through networks connected to XRP liquidity. That means regulatory frameworks worldwide accepting digital asset settlement as normal. Could that happen? Yes, but not overnight. A $100 XRP is likely not a one-cycle story. It would require multiple adoption waves. First wave, crypto speculation. Second wave, institutional integration. Third wave, sovereign or central bank level interaction. That's a longer timeline. The real question isn't, can XRP hit 100? The real question is, what has to change in the global financial system for that to make sense? And if you look closely, the system is already changing. Tokenization of real-world assets is accelerating. Cross-border payment inefficiencies are still a major issue. SWIFT alternatives are being discussed globally. The foundation for blockchain-based settlement is stronger today than it was 5 years ago. But we also need to address the risks. Competition is real. Other blockchains are improving speed and cost efficiency. Stablecoins are dominating cross-border transfers in some regions. Governments are exploring their own digital currencies. XRP does not operate in a vacuum. It must compete. Another key factor is supply dynamics. XRP has a large circulating supply compared to Bitcoin. That means price movement requires proportionally larger capital inflows. The higher the target price, the more liquidity is needed. So when someone casually says XRP to 100 next year, understand what that implies in terms of capital. It would require trillions in valuation. That's not impossible in the long term, but it's not a short-term event. Now let's build a possible timeline scenario. Imagine 2026 to 2027. Regulatory clarity is complete, at least one ETF launches, and XRP reclaims strong market momentum in a bull cycle. In that environment, $8 to $15 becomes realistic if overall crypto market caps expand significantly. Then imagine 2028 to 2030. Banks increase usage of on-demand liquidity solutions, cross-border payment corridors expand, and tokenized assets begin settling more frequently on blockchain rails. In that environment, sustained demand could push XRP beyond 20, possibly toward 30 or 40 if adoption metrics justify it. Beyond 2030, if digital asset settlement becomes standard practice globally, if financial institutions rely on blockchain liquidity as part of daily operations, and if XRP holds a meaningful share of that flow, then extreme price levels like $50 to $100 enter the realm of possibility. But that would reflect a transformed financial system, not just a speculative rally. And here's something most people ignore: timing cycles. Crypto moves in cycles driven by liquidity expansion, interest rates, and macroeconomic shifts. When central banks ease monetary policy, risk assets explode. When liquidity tightens, everything struggles. XRP's timeline will also depend heavily on global liquidity conditions. Watch interest rates, watch dollar strength, watch global risk appetite. These macro signals often tell you more than Twitter ever will. There's also psychology. XRP has one of the strongest communities in crypto. That community effect matters during bull runs. Strong communities amplify narratives. Narratives drive retail participation. Retail participation creates momentum. Momentum attracts institutions chasing performance. It becomes a feedback loop. But smart investors don't rely on emotion. They build scenarios. One conservative scenario, one moderate scenario, one aggressive scenario. Conservative, XRP stabilizes under 10 for several years with gradual adoption. Moderate, XRP reaches 15 to 25 in the next strong bull market cycle. Aggressive long-term scenario. Structural financial integration pushes XRP toward 50 or higher over a decade. The key takeaway is this: price targets without timelines are meaningless, and timelines without structural catalysts are fantasy. So whenever you hear someone throw out $100, ask yourself, what structural shift are they assuming? Is there ETF approval? Is there institutional custody expansion? Is there measurable payment volume growth? Those are the real drivers. On CoinGraph Community, we focus on connecting price with structure, because hype fades, infrastructure remains. XRP's long-term value will depend on real-world integration, not just exchange speculation. Now, let me ask you something. If XRP does get full regulatory clarity and an ETF launches, what do you think happens first? A slow climb or a violent breakout? Drop your answer in the comments. I read them, and your perspective helps shape future videos. As we close this out, remember this: wealth in crypto has historically rewarded patience more than speed. The people who held through uncertainty, who understood the fundamentals, and who managed risk wisely were the ones who benefited most when adoption finally arrived. XRP between $10 and $100 is not just a price conversation. It's a conversation about the evolution of global finance. It's about whether blockchain moves from experiment to infrastructure, and that transition takes time. If you found this breakdown valuable, Share this video with someone who keeps asking you whether XRP can really hit 100. Let's get a serious discussion going instead of emotional debates. Make sure you comment your long-term price prediction and the year you think it could happen. And if you're new here, subscribe to CoinGraph Community so you don't miss the next deep dive. The future of XRP won't be decided in a single headline. It will be decided through regulation, adoption, liquidity, and time. And if you stay informed instead of reactive, you position yourself ahead of the crowd.